All right, so let's dive into the future of where the crypto markets are heading and what are some of the contributing factors that could cause the market to go vertical. My name is Paul Barron. Welcome back to Tech Path. We're going to talk about two big moves today that are really kind of guiding, I think, the narrative behind how Bitcoin, Ethereum, and the key altcoins will kind of traverse the market in 2022. If you've been watching our show for long, you understand that our analysis on cryptocurrency is that we are now in an elongated project, or I should say an elongated season for how cryptocurrency and the market is responding. And also, I think when a lot of people are, at least our viewers are really looking and trying to understand how and when will Bitcoin start to see that kind of movement. Now, the cycle being elongated has really started to move a lot of analysts into looking at what are some of the key contributors that are going to cause these things to move. Remember, markets move based on how the market is responding to certain types of news. And then, of course, sentiment always is, in our opinion, the number one driver of how it moves markets, simply because it goes right into cash transactions based on what other people are saying out there. I want to jump to a couple of stories, but before we do, let's get into the market today. Market cap holding in at 2.38 million, as you can kind of see right there. 2.8 million, 2.83 trillion. 24-hour volume, 119 million, and of course the Bitcoin and ETH dominance ratios at 40.7 and 21.6. ETH up a nice amount here, so interesting to see, because I think we will see some movement in the space. And if you look at where Bitcoin's dominance has been throughout the year, this high right here was on January 2nd, right there, and you've got a dominance of 72.5. Obviously, we saw a big slide off in the year as DeFi. Then we saw, of course, gaming, NFTs chip away at the dominance of Bitcoin. And right there after we saw the May, remember the big dip in May, because this is something that's kind of interesting to a lot of people when you look at what we just had in terms of market correction. And the big dip in May, right here, ETH dominance basically dropped from 39.5 and then rose to almost 48 in the dominance. And that's pretty typical of how people anticipate these bear markets to start, is that Bitcoin dominance will start to rise because people look at that as kind of the secure asset, or the place that is the harbor of your wealth in moving assets into it. And if you look further out here on Bitcoin, started dropping, market started to normalize. We did see it kind of lift back up here at 48. This was around El Salvador periods. Then we started to see Bitcoin again drop, people moving a lot more into altcoins and the metaverse. This, of course, was on September 11th, right after metaverse announcement. You saw this. And then a little bit of a rise right here as the all-time highs were hit. And then the fall off right here, preparing for what many people thought would be the end of the cycle. And that, of course, has elongated. And notice that you don't see any kind of movement. Let me kind of draw that out for you guys so you can understand. This right here was the May correction. Bitcoin's dominance goes right up. This right here was this correction we just had. Bitcoin unfazed, meaning nobody moved any of their investments out of altcoins and maybe the metaverse, gaming, DeFi, all those different alternative projects, including projects like ETH, never got phased. So people did not look at this as being the end of the bear market, which I would agree when you look at what's happening in the space right now. All right, so I want to jump to this story, and that is the potential valuation and what it could mean for FTX US. So if you look at, and of course we'll talk about OpenSea a little later, but I think a lot of this is really starting to fly into the structure of where and what the market's going to look like in 2022. Because we obviously saw Coinbase go public this year, had some impact on the market. Another major exchange like FTX going public in the US, I think, would start to change things dramatically in terms of, again, mainstream acceptance. But if you look at what they're talking, look at these numbers here. FTX affiliate in the US is a major potential. It would get FTX US a valuation higher than that of Gemini, which is the New York-based exchange, launched in 2015. That was done by the Winklevoss twins, who settled with Facebook, with that little story there. But the new valuation would also bring FTX US closer to Kraken in terms of overall, which currently has a $10.3 billion valuation. That's according to PitchBook. Kraken was founded in 2011 in San Francisco, and Jesse Powell obviously said it could go public, meaning Kraken is also looking to go public. So you've got Kraken, then you've got FTX. If they manage to secure the same pre-public valuation, it could be a sign that the company is on a similar trajectory course to what Coinbase did. Remember, Coinbase going public and listing for a valuation just under $100 billion. So could all of that play into where this is leading in terms of a very bull market extension if FTX continues to push in this direction, along with what we're seeing around investments moving and the bull market kind of moving into what many people are saying could be even second quarter of next year, 2022. This is one of the reasons why I think some of these moves are big in terms of driving the crypto market, especially Bitcoin and the altcoins, into some parabolic movements in a very short period of time. And with the bounce back that we've seen on this market, even though I think we will see a slight more correction, the bounce back that we've been able to see is pretty amazing. If you think about this happening just last Friday, here we are on Tuesday, the market is almost recovered to a certain extent. Likelihood is we'll start to see Bitcoin start to move in the right direction again. But with projects and initiatives like what FTX is talking about in terms of public filing, this could really start to move things. But the other thing that is really interesting to me is the side of the social media giants who are moving in this direction as well. Remember, Web 3.0, all of these guys have been talking about this for months, if not, now we're about a year into this where I think a lot of social media platforms have decided, wait a minute, might be missing the next internet out there. We can't get caught behind the eight ball. If you look at this story right here, the Gold Rush big tech giants got a big boost in November when 776 Ventures, which is the guy from Reddit, Alexis Ohanian, did a venture program with Solana, raising $100 million investment fund to kickstart a new wave of Web3 projects. Again, this is a very focused project in the sense of going after Web3, which I think is important as we start to see this. And if you look at some of the statements they had here, biggest social network protocols and applications in the next 10 years will be the ones that are started in the next 24 months. This was done by Raj Gokul of Solana, founder and CEO, obviously, of the labs. I think he's right on this because as you guys know, I cut my teeth on Web 2.0, really worked for technology companies around the world, developers, all that. And I understood and saw that happen firsthand. And now watching this occur in Web 3.0 and what we're seeing in the early stages of Web 3.0 in terms of development, in terms of investment, the only thing we have to be cautious of is kind of the scenario that .bomb actually did, and that was when we had overheating of not only the economy, we had overheating of capital in the marketplace, which is where I think we are right now. The difference here will be that the thing that's driving this are these elongated bull cycles of Bitcoin, Ethereum, the altcoins. If you look at how that is pushing through, and this only continues to solidify, my argument is that the next bear market may not be as deep of a cut as we have anticipated in the past. The key here will be a few things. One is mainstream institutional finance. If they move into the space in a big way, then I think the cut becomes much less. Sure, the cycle of Bitcoin, it's real. It is a supply and demand scenario. And to a certain extent, you've got some other projects that are kind of pushing that, obviously with ETH going to proof of stake as opposed to proof of work. That kind of changes the dynamic there. And of course, many of the altcoin projects on layer one have already moved into this direction. So when you look at all of those things and the big plays over here of what's driving mainstream adoption, remember Coinbase going public, now FTX potentially going public, Kraken maybe going public. If these big exchanges start to really make moves and we start to see Joe Sixpack really come off the couch and start investing in crypto, you have mainstream adoption. So what's the next thing that has to happen? The next thing that has to happen is Bitcoin-backed loans. And here's why I say this, because remember, the financial community has not recognized Bitcoin on a balance sheet. And even we have this problem right here with our own banks of not recognizing Bitcoin on our own balance sheets as a true viable asset for collateral in a loan aspect. Now remember, your car, your real estate, your businesses, all those kind of things are realized collateral loans. And the problem is that most of the companies that have been going this direction are the new DeFi project companies like Celsius, like Nexo, like a Voyager, those kind of guys who are moving into potential Bitcoin-backed loans and or are controlling Bitcoin-backed loans. This story, though, I think is a surprise to most, and that is that Goldman Sachs to consider offering Bitcoin-backed loans. If Goldman Sachs moves into this class of loan generation, this will change the industry in a very, very big way, just because of collateralized assets, meaning that companies would be much safer and much more willing to invest in an asset like Bitcoin and cryptocurrency in general if they knew that they didn't have to sell that asset to be able to collateralize it and get loans. And if you get someone like a Goldman Sachs, remember, Goldman Sachs, they're the company that is behind a lot of investment funds, big, big investors. Remember, they run the Apple Card, the full credit ecosystem inside the Apple system. When you look at that kind of involvement, now we have something that really could start to bridge the gap. Now, could this happen in 2022? I think yes. I think we will see a lot of big banks and a lot of financial institutions move into crypto-backed loans. If you look at this one, what they're saying here, exploring plans could see Wall Street Bank use Bitcoin as a collateral for institutional cash loans, according to the report. It's considering whether it might be able to gain access to cryptocurrency such as Bitcoin without needing to directly engage in the token by offering loans utilizing tri-party repo arrangements. This is a big financial term in terms of how they structure these. If you look at how Wall Street firms have been very eager to go into this, remember Gary Gensler's still holding back on the spot ETF. That could push spot ETFs even closer. But the regulatory issues that banks are trying to deal with, we've had the guys from Vast Bank on to talk about this on our show. Check that video out. You'll see one of the banks who have already started to move in this direction. I think this is just the next shoe that will move into major banks accepting Bitcoin as collateralized. Now, the big question will be, will they leverage out and compete with companies like Celsius and Nexo, meaning what's the percentages? Are they super low interest rates? Or do they go after the traditional loan markets, which are much more longer term with a little bit higher interest rates? When you go to a business loan right now, you're probably paying anywhere between 3 and 6%. But if you go to, say, a Celsius and you do a short term, you can get as low as 1%. Granted, you're not getting the full effort of your capital because your collateral is only being collateralized due to the market volatility that could play into this. So this will be interesting to see the kind of projects and products that Goldman Sachs and others kind of bring to the space for this. This is why I think these kind of moves are going to be big for 2022 for two things. One, elongating the market, meaning into Q1, Q2. We may not see the Bitcoin high until maybe latter Q1. And the biggest one, mainstream adoption. Mainstream adoption will normalize Bitcoin, crypto, and even maybe the NFT and gaming space, so much so that we'll start to see some stabilization, at least in the core crypto assets that are out there. So if you're looking at long-term investing right now, this may be the steps that have to occur to really kind of move into a long-term strategy for cryptocurrency as a whole from an asset class position. All right, you guys are listening in over on the podcast right now. Thanks so much for all your kudos over there. We love it. Jump in over here on the YouTube channel. We'll give you not only the interviews, you get some of our analysis, a lot of our CPI data, which is our crypto power index. That is a tool that we are thinking hard and long about making available on a more active basis because we've had so many people wanting access to a variety of tokens. And tell me what you think about it. If we were to make the CPI available and doing a token drop every day, meaning an analysis every day to give you guys, that's like almost 250 tokens a year, that we would be dropping and doing additional analysis on that. Would that be something that would be valuable to you? Would you be interested in that? Because that is the sentiment and the amplification data that a lot of times gives us our trajectory numbers that gets us in early on many of the investments. Let us know. Hit us in the comments below. You can always reach me out on Twitter @Paul Barron. I'll catch you next time right here on TechPath.